Okay, so I wanted to make this video to go through my old postings about AMC and the gaps that I'm calling for. Let's take a look real quick. So I had a post like this stating that we're going for gap fills to the downside. We already filled a gap at 584. I had to make adjustments to each individual gap. For instance, at 503, the gap's really at $5 exactly. Um, what had happened was that all the moving around that I do in my chart, I was moving the lines slightly. So I got to readjust those, and I'll do this in real time to show you uh, where the gaps are being located at and why they're of great importance. So let's get ahead. Let me show you that real quick. Okay, so here we are live on the chart. Readjusted everything. I got these green areas. These are previous gaps that have been placed prior to me coming on Twitter. Um, and I can show you screenshots of my old trading account where I'd made calls before on gaps since before this was before the stock price has split, and back before the price was above like $50 per share. So that means that the gap fill that I had placed up in this area, if I could show you real quick, let's zoom out, 45-minute candle. So I can show you where I'm talking about. So this right here, this area, this gap that I have right here at 1640, I made a call for that before. I made a call in this area as well before. I had gaps called in this area as well. And these are gaps that I'm looking at as the price makes its way down before I look for the gaps that it's creating while it's going down. Because there's gaps here, there's some gaps here. I'm sure there's probably some gaps in this range, and so forth. But right now, what we're doing is we're in a bear market, so we're looking to fill the rest of the gaps down. I readjusted each individual gap, like I said at the beginning of this. As you can tell, 503 is now 5, and there's 559 now there because I did not see a gap there before, and I spotted it when I was doing some revisions to my chart. And we're going to go through each individual one down, and I'm going to show you where each one has a gap at. So let's take a look at 559, and as you can tell, 559, there is a gap right here. And then there's that gap we just filled yesterday that I posted about. Okay, we're at now we're going to look at the $5 one. There is also a gap. See, you find things when you're looking. Check this out. We're going to go ahead and fix this real quick. Let me go ahead and put this line in for you. There's a gap hovering right here. I'm going to go ahead and place this right here. I need to turn the magnet on. I'm not on the laptop. I'm unfortunately on my tablet right now. But I'm going to start using my laptop soon. Let me go ahead and place it. Alright, so I got that gap that I missed. See, I'm finding new ones. Maybe we'll just go ahead and use this recording to go through each spot to make sure I didn't look over any of them. So let's take a look to the right. Again, we're going to say this one's filled because it is at 546. And I think we've been past 546. Actually, I think I'm wrong. Might be wrong. Yeah, okay, so I need to change that. Sorry. Just bad sight using this tablet. I don't have a wide view. So let's switch this to, gap fill because it hasn't been filled yet. And then we're going to do exactly like we did before. So it's distinctive. You can discern between the two, except for the line needs to be colored yellow. So we'll go ahead and do that. There you go. And fix this. Alright, so we got the gap fill. And look at this. At pre-market, the orange line right here, pre-market, already heading towards the target to be filled anyways. So we're going to catch this probably live like we did the last one. And look at this as well. I want you to take a quick look while we're right here. This rising wedge like pattern right here, this bearish pattern, had a measured move and hit right at the gap. That's pretty good. Yeah, check that out. Alright, so let's go ahead and go look at the 546 and the $5 gap, as well as the 559, because that got filled yesterday, actually. Oh, no, it didn't. Okay, alright. 559 and the 546. We're going to look at these two gaps real quick. This pre-market, it's going to be considered filled as long as there's no gaps in between that gap. So I'm going to wait till market opens to see if pre-market filled the gap at 559. So now what we're looking at is the next one at 546, the one I just fixed. That'll be the next one. You got your $5 one right here. This is your $5 gap right here to this candle right here and this range right here. So that'll be the $5 fill. And the next fill after this one should be the 349 right here at the top of that candle to the bottom. That's not a gap. That's already been filled. Then you got your 309 at the top of that candle right there, that red one. Remember, it's going down, so it's got to hit the bottom candle, not the top candle to fill. It'd be the other way around. If it was going up, it'd be the top candle, not the bottom candle. So, next one will be 221 at the top of this candle right here. And then the one after that will be at 156 right here. I mean, it doesn't have to be at 156 there. So what we'll do is we'll remove the 156 because in itself, that's a gap all in itself right here. All right here. So for that to be filled, you'd hit 148. So 148 will be actually in place for right there. And it's locked. It is locked. They're all locked. Good. And this one will be 127, and then there won't be anything on that. The next, there's nothing down anymore for real. So let's take into consideration. That's just what the chart's giving me right now. I don't have any more data to the left. That's just what I see. Those are the gaps for localized to the that are localized to the downside. And we're gonna once these gaps are getting all filled, I'll flip the switch and start going for gap fills to the upside, because I can tell you right now, all this price action going down, it's creating gaps for it to come to the upside. There's no doubt about it. There's some gaps there. There's a gap right there. There's even a gap right there. So, but right now we're going down to fill gaps, and even after opening, we created a gap right here. So we're going to pay attention to that. We're going to go ahead and consider this gap just to be hit, because the body of the candle met that area. The wick met the area too. It just created a gap there anyways. So this will probably end up being like a situation where it just bounced like that, or just straight up bear flag, or bowling wedge down or something like that. So we'll keep an eye on that. It's just, I gotta look at these patterns and keep seeing what goes, what's going on every time we make a pattern breakdown. So breaking down already, going down for the next gap fill. So we're gonna go ahead and change this to green. We're gonna go ahead and change this to gap build, just so it's on the chart, just so it's there. and this one's looking to be filled at 546. AMC opened a minute ago, already down 5.13%. So, recap, we're looking at, let's take a look at that right here, this rising bearish wedge that came out of the Head and Shoulders. Okay. Let's just say this is the flagpole. From here to here. This will be the target, meaning it'll fill these two gaps down to 436. So let's go and put a line right here. Just put a line at 463 instead. And then we'll take that same line that I just deleted on accident. There we go. And we'll just go width of it. Just the width of this triangle. Bring it down here, and it's already hit that target, obviously.